Indigo is a Cinderella story of its own, a company that put in huge upfront costs to get into this ever mighty airline industry is now showcasing its strength, its efficiency, and its productivity. Numbers continue to be strong, and when you look at trailing 12-month data, they also augur very well for the prospects of the company. But you must ask the age-old question, is it worthy or is it right at this time to get into Indigo? That is the kind of questions that you should frame as an investor rather than blanket statements like Indigo is good regardless of what happens in the next 2 3 years. So looking at these fundamentals, looking at these numbers, Mr. Prasad, what would you say is a fair assessment of whether it is the right time to get into Indigo?
Indigo is reflecting its strength in every number that it displayed, because not just the sales are going up, the traffic is going up, and now that other airlines are now almost like disappearing from the market scene, except Tata's. So now all this will work very well in favor of Indigo into the future also. But you must remember always that any company that has sustained very successful operations and reach the pinnacle of the growth cannot just stay there and continue to grow from there also. Sometimes there may be a slight setback. That's what actually is reflected in Indigo now. The profit used to be 8,172 crores on a sales of 70,000 or 69,000 crores in the last quarter, that is 2024 March quarter. Now the turnover has gone up, but the profit dipped. Normally speaking, we consider it as a major negative. When the sales go up but the profit shrink, we consider it negative. But as I already told you, this company has gone to the strength of 8,000 crores profit from a loss of almost like 6,000 crores in the sometime in the recent past. So when it has traveled that far, a slight compromise in profit of about 300-400 crores is completely negligible, considering the scope for the air traffic growth in India remains unchecked. It is going to be extremely good going forward because the country is thriving on economic progress. So I think this company will do well. But should I buy this? For you to put extra money, we always maintain that there should be a gap of at least 30% from the market value to the fair value. If the fair value is close to the market price, it is a good company. We don't say it's a bad company, but it is not an investment worthy company. So now, if you look at the fair value of this company based on the workings, it is 5,470. The market price is 4,400. The gap is 24%, which is below our threshold of 30%. So what I would suggest is, if you want to put more money, you should wait for an opportunity. If you're focused only on Indigo, wait for some time, let it come down, and then gap will be more than 30%, then you can get in. Otherwise, you can probably prefer to wait a little longer.